You're watching Notepad. I'm your host, Ibrahim Sani. A lot of things actually happened today. A lot. When it comes to the national finances, the relationship that the government has with Goldman Sachs of 1MDB, and also the interest rate, the OPR, which is actually quite a remarkable story to be told for this year. Actually, this whole COVID 2019, and how it impacts the year 2020. But let's zoom in on some of these specific areas. Today, the government has done the Invest Malaysia 2020. It's an annual thing. Every year, the government introduces a plan or some sort of a shebang or event where they get all the fund managers in one place, where they get all the investors, institutional investors, and talk about the possibility and the prospects of investing in Malaysia for this year and for the years to come. This year is a little bit different because Invest 2020 is, in a way, a smaller scale compared to the previous Invest Malaysia events, and largely because that's meant to be deliberate. They want to keep the attendees at least apart remotely, but they want to keep the whole conversation keeping on going. So because of this Bursa Malaysia, and this year's event was co-organized by Maybank, they've decided to split the Invest Malaysia agenda into various series. So they've done their first series for this year. It's specifically addressing, the first series talks about the recovery of the economy. They talk about some of the policies and some of the opportunities that surrounds it, and that is the main focus for this year's Invest Malaysia for the first series. I'll play a clip from Sri Abdul Wahid, the Chairman of Bursa, in his opening address, so you better understand the kind of context that has taken place today when it comes to Invest Malaysia 2020. Take a look at Sri Abdul Wahid.
Ladies and gentlemen, please allow me to cover three areas in my welcoming address this morning. First, on the new direction and approach for Invest Malaysia 2020. Since our launch back in 2004, Invest Malaysia has become synonymous as the platform to discuss, dialogue and debate actions that will inject greater dynamism and vibrancy into our capital market. It is the stage that highlights Malaysia's unique value propositions. This year, however, we are convening Invest Malaysia virtually for the first time, given the cross-border travel restrictions, and to ensure everyone's health and safety. We are indeed fortunate that technology has enabled us to broaden our reach globally, with close to 1,000 institutional investors, public listed companies and partners across the globe joining us for this year's capital market conversation. Rest assured that this virtual platform will still deliver an enhanced and interactive Invest Malaysia experience, providing insights from decision makers and industry captains to you. The theme for this year's Invest Malaysia is Recover, Advance and Sustain, and it aims to bring out meaningful conversations from around Malaysia's economic recovery from COVID-19. In addition, we will share marketplace advances that are being put in place to ensure long-term sustainable growth. Invest Malaysia 2020 will adopt a more targeted approach by having our capital market conversations in thematic series, enabling us to focus on target sectors. This will be more effective and allow greater clarity on our efforts to ensure long-term sustainable growth of our marketplace post-COVID-19. Now, to further promote inclusivity amongst the investing community, we will be streaming selected sessions live through our Bursa Marketplace Facebook page. This will enable more retail investors' participation and empower the next-gen investors, which is a key focus area for the exchange. Ladies and gentlemen, the world is going through an unprecedented healthcare crisis. Assessing the economic impact of COVID-19 has been challenging due to the extreme speed in which this crisis has unfolded. Foreign outflows from the country's capital markets have persisted throughout the period as investors remain cautious. However, this phenomenon is not only unique to Malaysia, but experienced by all emerging equity markets in Asia. And this brings me to the second topic on Bursa Malaysia's purpose as the marketplace for investors, business, and intermediaries alike. While there were calls to suspend trading, we believe having continued and reliable access to the Malaysian capital market is vital for immediate and long-term market confidence. To aid in the recovery of the market, Bursa Malaysia, together with the Securities Commission, introduced various relief measures aimed at lessening the financial burden and provide greater flexibility for our stakeholders to navigate through this challenging period. Amidst the many uncertainties, the Malaysian economy has been a success story of perseverance, stability, and inclusion spanning over 6 decades. Our strong fundamentals have provided some resilience against volatility in the global economy. According to the World Bank, while Malaysia, like many other economies, have been deeply affected by COVID-19, our diversified economic structure and sound track record of macroeconomic management are some of the factors that have contributed to our resilience. And this makes Malaysia well placed to recover from this crisis. And this is reflected by our benchmark FBM KLCI index being the best performing index among the ASEAN markets, declining by only 5.5% in the first half of 2020 to 1,501, compared to the 19.6% decline in Singapore's STI and 15.2% decline in Thailand's SCT index over the same period. It also outperformed regional peers during this COVID-19 period. The healthcare index in particular recorded stellar gains of 86.9% for the first half of 2020 as internationally renowned glove manufacturers continue to attract the attention of investors, building upon the strong momentum even before the pandemic as a potential beneficiary of the US-China trade diversion. Ladies and gentlemen, although Malaysia stands out as one of the economic success stories in Asia over the past few decades, there is one pervasive conversation today that needs to be discussed. Will we use this unique period to advance faster, or will we go back to the status quo? Which brings me to the third subject on the importance of PLCs to continue to perform financially. Over the last 5 years, our domestic market has been confronted with several challenges stemming from escalating trade tensions, softer economic growth outlook, and lackluster corporate earnings. Between 2015 and 2019, earnings of Malaysian PLCs have declined by 5.4%, and this is something that we need to address. Given the rapid changes that have occurred, moving forward, with the status quo now seems somewhat inconceivable, we need to relook and possibly replicate some of the past successes, such as the GLC transformation program. Between 2004 and 2015, many GLCs were transformed into better performance, better governance, and enhanced nation-building roles. And over that 11-year period, the net profit of the 17 government-linked companies grew by some 10.2% per annum, and their combined market capitalization grew 2.9 times to 386 billion ringgit. And this represents a total shareholder return of 11.1% per annum. Other non-GLCs similarly performed well over the same period, as reflected in the improvement in the FBM KLCI, with a CAGR of 5.8% over the same period. Well, we believe that the time has come for shareholders, including GLICs, to demand more from the board and management of PLCs they invest in. So later, at about 11 a.m., I look forward to moderating the second session with the GLIC captains later. Ladies and gentlemen, Malaysia's capital market has long been recognized as forward-looking, well-regulated, and ranks highly in investor protection. Our market is aligned with global best practices in corporate governance that led to the protection of stakeholders across the triple bottom line of social, environmental, and financial profits. We hope today's agenda will give you a better understanding of what we are doing as a nation.
That was Tan Sri Wahid Omar, the Chairman of Bursa Malaysia, giving the welcoming address. As you can see, the comments that were delivered by Tan Sri Wahid is more of being robust, ensuring corporate governance is attained, trying to ensure that liquidity in the market is obtainable. Those are the kind of conversations that is going to be had, and slightly different from what we had before, because it's not just about growth this year, it's about recovery. And again, when my conversation with some of the central bankers out there, with some of the research houses over the past few weeks since we started the Recovery MCO, they were talking about the use of recovery. They really want us to understand that when they say recovery, it's not recovery to the standards that we were at late 2019 or earlier this year. It's actually recovery from that holiday that we just took, in April, in May, and to some extent in June as well. That is the recovery that we're talking about. Can we actually bounce back from that kind of episode? So things will never be the same again. Things will always be different moving forward from now on, and that's why we have to be ready for the changes that is coming. We'll take a short break. When we come back, we'll listen to Budget 2021, what it is about after this. Don't go anywhere.